as we see, but members have the option to appear both in person or virtually. We consider the nominations of two highly qualified nominees today, Dr. Lael Brainerd to be Vice Chair of the Board of Governors of the Federal Reserve System, and Sandra Thompson, Acting Director Sandra Thompson to be Director of the Federal Housing Finance Agency. It's amazing what a difference a year makes. We have today safe and effective vaccines that are saving lives, that are getting people back to work. 207 million Americans are fully vaccinated. Our economy has weathered the storm and rebounded in 2021. We added a record 6.4 million new jobs, more than any year since 1939. It isn't just the jobs numbers, it's the quality of those jobs. Workers are demanding raises, they're finally getting them. They're changing jobs at record rates because people finally have some options. The past year has illustrated how our economy works best when it works for everyone. Not just Wall Street, not just the top 1%, everyone. Whether you punch a clock or swipe a badge, whether you earn a salary or make tips, whether you're raising children or caring for an aging parent, no matter who you are, where you live, what kind of work you do. Economic growth won't mean much if it doesn't reach all workers, families in Steubenville, in Scranton, and communities of all sizes all over the country. The President's nominated Dr. Brainerd and Acting Director Thompson to important roles in our government and our economy to put these workers and their families at the center of our government and at the center of our economy to deliver results that actually improve their lives. Dr. Brainerd's a leading economist who understands a strong economy is one where workers have power. She's committed to a worker-centered monetary policy that boosts employment and lifts wages, something that every member of the Fed's rate-setting committee has reaffirmed. She's led the way in modernizing and strengthening the very important Community Reinvestment Act, something that Senator Warner's been particularly interested in, a landmark civil rights law passed to begin to undo the shameful legacy of redlining and lending discrimination and spur investment in all neighborhoods and communities. Through her leadership, the Fed listened to the people whose lives and livelihoods are affected, civil rights leaders, affordable housing advocates, local officials, banks of all sizes. She brought everyone to the table. She's working to ensure banks meet the needs of all of our communities. During this pandemic, she served as a steady hand, working shoulder to shoulder with Chair Powell to stabilize our economy and steer the country out of our abyss. Dr. Brainerd has a distinguished record of bipartisan service in government. She joined the Fed in 2014. From 2009 to 13, she was Undersecretary for International Affairs at the Department of Treasury. She worked in the first Bush administration. She worked in the first Bush administration as a staff economist for the Council of Economic Advisors and Deputy National Economic Advisor in the Clinton administration. She was a professor at the Massachusetts Institute of Technology. As Vice Chair, she'll be tasked with supporting efforts that are already underway to empower workers and refocus our economy on Main Street and make sure that all Americans have good jobs with growing paychecks and affordable cost of living. That also means supporting efforts to close the racial wealth and income gaps that have barely shrunk in decades. As the Fed has noted, quote, the average Black and Hispanic or Latino households earn about half as much as the average white household and own only about 15 to 20% as much net wealth. As one of our colleagues once said, when we all do better, we all do better. With Governor Brainerd as Vice Chair of the Fed, Americans will have someone who understands that workers, not corporations, not Wall Street, that workers create economic growth. Her commitment to the success of all Americans from all walks of life in every region of the country is clear in all the work she's done throughout her distinguished career. Acting Director Thompson has a similarly long and distinguished career in public service. In her time as acting director, she's taken meaningful steps to put renters, homeowners, and families first. Over the past 6 months, Acting Director Thompson has directed the Gses to strengthen their plans to preserve affordable housing and support manufactured housing in housing in rural areas. She's expanded opportunities for middle-class and low-income homeowners to save money on their mortgages through refinancing, and she's increased the focus on fair housing at the Gses. I can think of no other nominee as qualified to work to make homes more affordable and available for families throughout the country while strengthening the financial standing of the GSEs. More than 24 consumer advocates, civil rights organizations, and housing advocates have all written to this committee supporting her. Before being designated as acting director in 2021, she served for 8 years as the deputy director for the Division of Mission and Goals at Fhfa. She led an office responsible for the mission activities of the GSAs and housing and regulatory policy under directors of both parties to ensure the safety and soundness of Fannie Mae and Freddie Mac and the federal home loan banks. Prior to joining FHFA, she spent 18 years at the FDIC, where she worked for 7 different chairpersons from each of the political parties, and in senior level positions, including director of the Division of Supervision and Consumer Protection and the director of the Division of Risk Management and Supervision, helping to stabilize her nation's banks. Early in her career, she served at the Resolution Trust Corporation, cleaning up and restoring faith in our financial crisis after the savings and loan crisis. In a nutshell, you can see how qualified she is. She'll be in a position at FHFA to tackle some of the most pressing issues facing homeowners and renters to ensure the stability of our housing finance system. Whether you're looking to rent or to buy, housing had become too expensive and too hard to find long before the pandemic began. More than 50 years after the passage of the Fair Housing Act, people of color are far more likely to be denied a mortgage, far less likely to own their own home, far more likely to pay more in rent than they can afford. And in just the past week, tragic fires in the ranking member's home state and in the Bronx have reminded us of how far we need to go to ensure that everyone has safe, affordable places to live. FHFA has an important role to play in addressing these challenges. Acting Director Thompson has distinguished herself as the person we need to lead this critical work. These nominees, each of them understands the challenges our economy faces. They understand the people who make our economy work, like so many of the president's nominees. It's notable that as we recover from a pandemic that laid bare just how hard women especially work, at paid jobs in the labor market, unpaid jobs taking care of families, we have 2 women poised to take leading roles in our recovery. I want to thank both nominees for their exceptional and their lengthy years of commitment to public service. Ranking Member Toomey.
Thank you, Mr. Chairman. Governor Brainerd and Ms. Thompson, welcome. You both have very extensive experience in your respective fields, and I commend you both for your commitment to public service. Governor Brainerd's been nominated to serve as Fed Vice Chair. The Fed has been granted significant independence to isolate it from political influence. However, Congress has given the Fed very narrowly defined monetary and regulatory missions. First, the Fed's been tasked with conducting monetary policy to promote stable prices and maximum employment. But the Fed's recent actions have failed to maintain price stability. Last year, Governor Brainerd repeatedly insisted that inflation was transitory. We've now had 9 consecutive months where inflation has been more than 2 times the Fed's 2% target. That makes it pretty clear that inflation is not transitory. Yesterday's CPI release of 7%, the highest in 40 years, confirms that further. Inflation is a tax that's eroding Americans' paychecks every day. Even though wages are growing, inflation's growing faster, and that's causing workers to fall further and further behind. I appreciate that the Fed has pivoted toward normalizing monetary policy to tackle inflation, but the Fed also needs to learn from its mistakes, and I think that begins with the Fed's new monetary policy framework, of which Governor Brainerd was an author and an outspoken advocate. The framework really subordinated the Fed's price stability mandate to try and maximize employment by allowing inflation to run hot. Under this approach, the Fed looked beyond employment as a whole to consider whether employment was, quote, broad-based and inclusive, end quote. What this meant was the Fed would sacrifice stable prices to see if it could achieve higher employment gains in certain demographic groups. As Governor Brainerd explained last year, the Fed should look at employment numbers on a, quote, disaggregated basis, end quote, and use monetary policy to narrow employment gaps between different, quote, racial and ethnic groups, end quote. This framework risks keeping in place an inflation tax on all Americans while the Fed decides which subgroups of people should have faster job growth than others. One of the problems is that monetary policy can never equalize employment rates among different groups. In the end, the Fed would run the risk of failing on both fronts of its dual mandate because you need stable prices in order to achieve a strong economy and maximum employment. Given this fact, the Fed should really reevaluate this new framework. The Fed also has the mission of monitoring the safety and soundness of certain major financial institutions. Under Chairman Powell, the Fed enacted modest, sensible reforms that reduced regulatory burdens and helped spur economic growth. Governor Brainerd was the sole dissenter over 20 times on regulatory matters, an unprecedented number at the Fed. For example, she argued that the Fed's reforms of capital liquidity and stress tests for smaller or less complex banks would, quote, weaken the safeguards at the core of the system, end quote. Yet though the economy nearly collapsed at the start of the pandemic, the banking system emerged exceptionally well capitalized and served as a source of strength through the economy, demonstrating the sensibility of these reforms. In addition to opposing those reforms, Governor Brainerd has urged the Fed to take an activist role on global warming, which is beyond the Fed's expertise and mission. According to the New York Times, she's, and I quote, endorsed the use of supervisory guidance, the Fed's recommendations to banks, to encourage financial institutions to curb their exposures, end quote. Well, I'm particularly concerned that she's advocated for the Fed to shape environmental policy through so-called climate scenario analysis. Not only does the Fed lack expertise in environmental matters, but there's no reason to believe that global warming poses a systemic risk to the financial system. As I've noted before, we haven't found a single bank that's failed in the modern era due to a severe weather event. There is a transition risk for banks associated with global warming, but that's political and regulatory in nature. It's the risk that unelected bureaucrats will attempt to impair the value of energy-related assets by cutting off credit to the energy sector. This isn't about whether climate change is a significant threat to our society. It's about the fact that climate policymaking requires trade-offs between costs and benefits. And these are inherently political decisions, which is why they belong firmly in the domain of officials who are elected and directly accountable to voters. Now, turning to Ms. Thompson, she's been nominated to serve as the director of the Fhfa, where she's had a busy 6 months as acting director. In that time, she's proposed reductions in capital requirements for Fannie Mae and Freddie Mac, suspended restrictions on the GSE's acquisitions of high-risk loans, required the GSEs to develop plans to further what Democrats call, quote, racial equity, end quote, but really looks just like affirmative action in the housing space, and increased GSE's affordable housing goals. Unfortunately, she has not prioritized ending the GSE's conservatorships. I'm concerned that the administration is seeking to use FHFA and the GSEs to take on more risk for taxpayers and expand affirmative action into housing. That makes Ms. Thompson's nomination, notwithstanding her extensive experience, a referendum on the administration's radical housing policy. This policy contemplates more mortgages for higher-risk borrowers, repurposing the GSEs as instrumentalities of social policy, and a disappointing embrace of the failed GSE model. In a break from decades of bipartisan housing finance reform efforts, this administration is using the power of the GSE's conservatorship to command and control a huge swath of the American economy. And we're now asked to ratify this radical housing policy and take ownership of the bailouts and foreclosures that I'm afraid are likely to follow. Especially given where we might be in the housing cycle, we should be reluctant to do so. Mr. Chairman, I look forward to hearing from today's nominees.
Thank you, Senator Toomey. Would the witnesses please rise and raise your right hands? Do you swear or affirm that the testimony you are about to give is the truth, the full truth, the whole truth, and nothing but the truth, so help you God? Do you agree to appear and testify before any duly confirmed committee of the United States Senate? Please be seated. Thank you. Governor Brainerd and Acting Director Thompson, welcome to the committee. If you would like to introduce family members or friends in your testimony, I invite you to do that at the beginning or whenever you want to. Governor Brainerd, please begin.
Is this working? Yes. Chairman Brown, Ranking Member Toomey, other members of the committee, thank you for this opportunity to appear before you. I'm greatly honored to be nominated by President Biden to serve as Vice Chair of the Board of Governors of the Federal Reserve, and I'm delighted to be here alongside Acting Director Thompson. If confirmed, I look forward to continuing to work with members of this committee. We're seeing the strongest rebound in growth and decline in unemployment of any recovery in the last 5 decades. Over the past year, unemployment has fallen by 2.8 percentage points, and growth is estimated to be around 5.5%, according to a variety of private forecasts. But inflation is too high, and working people around the country are concerned about how far their paychecks will go. Our monetary policy is focused on getting inflation back down to 2% while sustaining a recovery that includes everyone. This is our most important task. When the pandemic struck in 2020, I worked closely alongside Chair Powell, Secretary Mnuchin, and many others with the support of Congress to calm financial market turmoil and save American jobs and businesses. When markets stabilized, I worked to responsibly wind down the emergency facilities that were established. And today, the economy is making welcome progress, but the pandemic continues to pose challenges. Our priority is to protect the gains we've made and support the recovery. Since 2014, as a member of the Federal Open Market Committee, I've supported monetary policy that's responsive to economic conditions as they evolve. Our approach helps sustain the longest recovery on record, with low inflation and millions of jobs. More broadly, I've worked to safeguard and grow our economy during the administrations of 5 presidents from both parties. I've worked on the U.S. policy response to every major financial crisis over 3 decades. In some foreign countries, I've seen up close how high inflation hurts workers and families, especially the most vulnerable. I'm committed to pursuing the Federal Reserve's congressionally mandated goals of price stability and maximum employment, and to maintaining the strength and resilience of our financial markets. I'm committed to the independent and nonpartisan status of the Federal Reserve. If confirmed, I look forward to supporting Chair Powell in carrying out the responsibilities assigned to the Federal Reserve and in fostering transparent communication and accountability to you and to the American people more broadly. I will bring a considered and independent voice to our deliberations, drawing on insights from working people, businesses, financial institutions, and communities large and small around the country. Before closing, I want to thank my husband, Kurt, my daughters, Kaylin, Kira, and Chloe, for their steadfast support of my work, and I would like to commend the outstanding efforts of the many individuals across the Federal Reserve System who work so hard every day to serve the American public. Senators, I thank you for your consideration, and I look forward to answering your questions. Thank you.
Thank you, Dr. Brainerd. Acting Director Thompson.
Chairman Brown, Ranking Member Toomey, and members of the committee. I first want to thank President Biden for nominating me to serve as the Director of the Federal Housing Finance Agency. It is the greatest honor of my career to appear before you today. Thank you to the senators and the staff members with whom I've met in advance of this hearing. If I'm fortunate enough to be confirmed, I look forward to working with all of you on the important issues at FHFA. I would like to introduce my sons, Jarrett and Aaron, who are here with me today, and I'd like to recognize and thank my parents, Herman and Helen Lathan. While due to COVID considerations, they are not able to be here in person, the fact that my parents are still alive to witness today's hearing is very meaningful to me. I was born and raised on the south side of Chicago to my extraordinary parents who came to Chicago from Mississippi as part of the Great Migration. My parents and family, along with the Chicago public school system and my beloved Howard University right here in Washington, taught me hard work, dedication, determination, and perseverance. I would specifically like to recognize the schools in Chicago that helped me succeed: McDade Elementary School, Gillespie Junior High School, and Lindblom Technical High School, all on the South Side. My nomination for Director of the FHFA is a great privilege. I recognize that it is rare for a career public servant to have the opportunity to lead a federal agency, and as the first African American woman nominated for this position, I appreciate the opportunity to demonstrate my expertise, good judgment, and leadership in this position. I am proud of the work we've done at FHFA in my 8 years there. The agency plays a vital role in promoting access to mortgage credit nationwide and protecting the safety and soundness of the housing finance system through our supervision of Fannie Mae, Freddie Mac, and the Federal Home Loan Bank system. Throughout my 40-year career, my experience in mortgage markets and financial regulation at multiple agencies, I've seen what it takes to lead a federal agency and be effective in that role. In my work at FDIC and FHFA, I've demonstrated leadership, management ability, and an understanding of the secondary mortgage markets and industry, a fair and balanced perspective, and a strong belief in the importance of the safety and soundness of America's financial institutions. During my time in federal financial institution regulation, I've witnessed and worked in several financial crises. These crises expose some truths in housing finance. When I served as the FDIC's head of supervision and consumer protection throughout the 2008 financial crisis, I witnessed firsthand the consequences of irresponsible lending when hundreds of banks across the country were closed and a record number of homes went into foreclosure. I saw how the borrowers who received unsustainable and predatory loan products were devastated in the downturn, and historically underserved and disadvantaged communities were hit especially hard. Years of progress in closing the homeownership and wealth gaps were erased as a result. In fact, today, the black-white home ownership gap is wider than it was in the 1960s when lending discrimination was based on race was still legal. As a financial regulator, I have long believed that safety and soundness and access to credit are not mutually exclusive. Broad, fair access and the stability of financial institutions work together as pillars of the nation's housing finance system. Indeed, sustainable access to credit requires sustainable lending standards. FHFA will continue to promote sustainable and equitable access to credit in a safe and sound manner. We will responsibly focus our efforts on the safety and soundness mission Congress gave to the FHFA and on the mission that Congress gave the housing GSEs under our supervision, providing liquidity across the nation and especially supporting underserved markets like rural and tribal areas, manufactured housing, and preserving affordable housing. If confirmed, it would be an honor for me to serve as the FHFA director, and I will continue to be fair, balanced, and transparent. Thank you for the opportunity to testify before you today, and I'm happy to answer any of your questions.
Thank you, Acting Director. I appreciate both of you came in under your 5 minutes, and I ask you to continue to be, rarely do people do that are witnesses. I ask you to continue to be brief. I have 2 questions for each of you, so as briefly as you can. Governor Brainerd, start with you. Thank you for your work during the pandemic. The Fed took extraordinary action, as we know, to support the economy. Some of my colleagues seem to have forgotten what a critical state our economy was in when the pandemic first hit. Workers and small businesses in this country certainly haven't forgotten. Why were those actions necessary, and did you support all of them? Governor?
Thanks for asking the question. So I worked day in and day out alongside Secretary Mnuchin at Treasury, Chair Powell, Vice Chair Quarles, and other colleagues to stand up the necessary facilities to calm financial markets. As you no doubt recall, our financial markets were in turmoil as they absorbed the news of the pandemic. A lot of workplaces had to shut down because of the risk of infection before vaccines were available. And millions of Americans overnight were placed on layoff. And we really risked losing small businesses around the country. We risked losing medium-sized businesses and the tens of millions of Americans that those businesses employed. And so I think due to the very important actions that Congress took, we worked closely with Treasury to make sure that there was financing available for small banks and CDFIs and MDIs to get loans to small businesses in communities around the country. We worked to make sure that Main Street financing was available. We made sure to ensure that financial market turmoil was calmed, and we provided a lot of support to the economy. And here we are, 2 years later, and we've regained all of that massive loss of GDP. We have businesses that are thriving around the country. People are back to work. So I was proud to work on that alongside all of my colleagues. I did not disagree with any of the actions that we took. In fact, I strongly supported them and worked hard to make them work.
Okay, thank you, Governor. Acting Director, you know better than almost anyone how critical it is that financial institutions to have appropriate capital to be transparent about their risks. What have you done so far, and what more needs to be done to make sure GSEs have the capital they need to continue providing access to housing in good and bad times?
Right. Thank you for the question, Senator. I firmly believe in the safety and soundness of the housing GSEs, Fannie Mae and Freddie Mac specifically. They've just been allowed to build capital and retain earnings, and we think that that is very important. One of the steps that we've taken is to encourage the use of the credit risk transfer program, which, as you well know, Fannie Mae and Freddie Mac are the largest holders of mortgage credit risk in the United States, I dare say the world. And one of the things that we like to do is facilitate moving that credit risk off the backs of the taxpayers and into the hands of the private sector. And we believe that some of the changes that we've made to the capital rule will help facilitate the credit risk transfer program and move credit risk away from the GSEs and the taxpayers and into the hands of private investors.
Thank you, Acting Director. Dr. Brainerd, second question for you. For the first time in decades, workers are starting to see a bit more power in our economy, record job gains, record wage increases. We need to continue that progress to catch up to all the costs that have been rising for decades. You'll work closely with Chair Powell, and if you are both confirmed, and oversee the Fed's monetary policy. How does the Fed's monetary policy framework allow us to ensure we have stable prices and an economy where all workers have a good job and reap the benefits of economic growth?
So our monetary policy framework puts stable prices and maximum employment on an equal footing. I think we are taking actions in the monetary policy front that I have confidence will be bringing inflation down while continuing to allow the labor market to return to full strength over time. So we're going to achieve that maximum sustainable employment while we bring inflation down to 2%.
Thank you, Governor Brainerd. Last question, Acting Director Thompson. GSEs have reported about 4% of their new mortgages over the past 2 years went to black borrowers. Fewer than 11% went to Latino borrowers. For refinance loans, the shares are even lower. Compare that to FHA, which most recently reported that 17% of loans went to black borrowers, and more than 25% to Latino borrowers. What should GSEs do to make sure that they're serving borrowers of color equally?
Thank you for the question, Senator. Certainly, we believe that every American ought to have sustainable and affordable housing and also places to live if they're renters. With regard to the black and ownership gap, one of the things that we've done is we've asked the enterprises to come up with some equitable housing plans, and they are supposed to focus on and identify barriers that underserved communities, particularly in communities of color, have as it relates to getting a mortgage. They're supposed to identify barriers and then come up with specific plans to execute the requirements that they've developed. We also have a focus, as you all know, on all underserved communities, whether they're rural or tribal and other areas around the country. But we think that these housing equitable plans will go a long way to help minority homeownerships in underserved communities across the country have access to mortgage credit.
Thank you, Acting Director. Senator Toomey.
Thank you, Mr. Chairman. Governor Brainerd, thanks again for your continued willingness to continue in public service. I know this isn't always easy. I was encouraged to hear you say that you are committed to the independent and nonpartisan status of the Federal Reserve. It's very important that Fed decisions on monetary and regulatory policy are entirely free from political interference. So I think this is a simple yes or no question. will you commit to considering yourself independent from the White House, regardless of which party occupies it?
Yes.
Thank you. And will you commit to make your decisions without regard to political or electoral consequences?
Yes.
Thank you. So I think you have acknowledged the importance of the independence of the Fed, how crucial that is for maintaining the trust and confidence of the American people. In light of that, I wonder if you could tell me how you view the coup by three men, including one who's serving on a term that expired 3 years ago, that forced out Jelena McWilliams, a well-respected regulator, from the once independent FDIC.
So I can't speak to the FDIC. I can tell you that I've enjoyed working with Jelena, continue to work with her, Jelena McWilliams, Chair McWilliams, on issues such as the Community Reinvestment Act. We have a very different institution, and it's a very collegial institution. It is nonpartisan. And I can tell you a little bit about how I work in that institution, just to give you a sense.
Well, I'm very limited on time here, so let me just, so I know you commented on Jelena McWilliams, and I appreciate that. And I do understand you'd have had a good working relationship with her. But I think I would suggest and ask you to reflect on what happened there, and I think it is relevant. The Fed, as you know, is also a multi-member agency. It has prided itself on operating free from political interference and following norms of governance for many years. That used to describe the FDIC, and unfortunately it doesn't anymore. And there are people on the left and in this administration who want the Fed to become more political, to become advocates for the causes and agenda that they support. And I have warned, and I'm concerned, that the Fed's dalliance with those issues, totally irrelevant to the dual mandate, will undermine the Fed's credibility and threaten its independence. And I think that's very important. Let me move on to climate risk. As you know, the Fed has consistently stated that there are two categories of climate-related financial risks. The first is physical risks, and the second is transition risks. Now, the actual data shows that physical risk, that is, actual severe weather events, do not threaten financial stability. This week, Chairman Powell said the possibility of financial stability disruptions from physical risks, quote, doesn't seem likely in the near term, end quote. Well, that's obvious, and there's a recent report from the New York Fed that backs this up. According to the report, weather disasters from the last quarter century had insignificant or small effects on U.S. banks' performance. So do you acknowledge that the likelihood of weather events leading to systemic risk during your term as Fed governor is virtually zero based on historical data?
So to be honest, I think it's very important for us just to understand potential implications of tail risks. Tail risks are risks that have very, very low probability of happening but have extreme damage. And of course, I wouldn't have expected us to need to study pandemics 5 years ago either. And yet a lot of our policy making over the last 2 years has been really under the cloud of a very complicated set of economic conditions and financial risks associated with a natural event. So, it's our job just to be very attentive to potential risks to the financial system.
So here's my concern in this, and I am certainly not alone in this. The other risk, the actual evidence shows that there's no real physical risk. The transition risk, though, is real, and Chairman Powell explained the source of that. The source of transition risk is really government policy. And this is what's concerning. There are lots of risks out there. There could be a trade war with China. There could be geopolitical turmoil coming from a Russian invasion of Ukraine. We could have the government engage in shutdowns again in response to a pandemic, for instance. Actually, I would argue each of those poses a greater risk to the financial system than some sort of climate event, which has never resulted in the failure of a major bank. But you haven't advocated doing stress tests around those other risks. The only one I know of that you have advocated is stress tests for the less likely risk, which is the climate-related risk. And the concern that many of us have is that this whole construct, unique to climate risk, even though it is really not a threat, certainly in the foreseeable future, to the financial system. It's all about a precursor for using the regulatory power of the Fed to direct capital away from politically disfavored industries. So Sarah Bloom Raskin is, by some accounts, might be President Biden's next nominee to be the vice chair for supervision. Now, she's been explicit on this point, and she has argued regarding the implementation of the CARES Act that the Fed, and I quote, should not be directing money to further entrench the carbon economy, end quote. So she's explicitly advocated that the Fed allocate capital by denying it to this disfavored sector. And my question is, do you agree with Ms. Raskin that the Fed should play that role?
So let me just respond to your question, Senator. Thanks for asking. I have not suggested that we should do stress tests for climate. Stress tests are very specific. They are related to the capital planning of large financial institutions. We do actually include geoeconomic risks in those stress tests, so we have included things like Brexit in our stress test. But I certainly have not stated that we should do climate stress tests. In terms of supervisory guidance, what we tend to do is ask large institutions, in particular, do you have a good risk management framework for assessing all of your material risks? We would not tell banks which sectors to lend to or which sectors to not lend to, but we do want to make sure that they are measuring, monitoring, and managing their material risks, and many large financial institutions.
So then, just to be clear, then you disagree with Ms. Raskin on this point?
So I honestly have not studied her positions, and I would simply say I can speak to what we do in our supervisory guidance. And, you know, it's pretty meat and potatoes. It is very well known to the large institutions, and not that, really not that different from what they're doing today. The one thing I would also just want to clarify is I don't think that's appropriate for small institutions. I think small institutions don't have as big a footprint. I think, you know, they'll decide what their risks are, but I'm really more focused on the large institutions who themselves come in to tell us that they'd like to have more consistent expectations in this area across jurisdictions.
I see you run out of
Thank
time.
you, Senator Toomey. Senator Menendez of New Jersey is recognized.
Thank you. Governor Brainerd, let me first thank you for your leadership on reforming the Community Reinvestment Act rule over the past several years. In the middle of 2020, when the Trump administration was ramming a flawed rule through the OCC, civil rights advocates, banks, and other affected parties looked to you as a serious voice in the room. And if confirmed, I have no doubt that you'll continue in that spirit as we approach Dr. King's birthday commemoration this coming week. I think about this as one of the essential elements of a move towards a more just society. So let me first ask, during the past few years, as you were engaging in that work, what did you hear from minority-led organizations about the CRA changes needed to further incentivize investments in minority communities who were disproportionately impacted during the pandemic?
Well, thank you for your question. And yes, I was very pleased that the board unanimously put out an advance notice of proposed rulemaking that I think, you know, really does provide a nice foundation for community groups and banks to give us feedback on what would be some good modernization measures. So what we hear still from many communities around the country is that they still don't have similar access to credit. There are still barriers in terms of getting that access. They really like having bank branches in their neighborhoods, but particularly in rural areas, that's not always the case. And they want to be able to have more interaction with financial institutions. They want minority depository institutions and community development financial institutions, which do tend to be very good at serving those underserved communities, to be strengthened. And they just really care deeply about the Community Reinvestment Act, as do many banks.
So would you commit to making it a top priority to work with the other regulators to issue a strong new rule in a timely fashion?
I'll certainly support that effort at the board and with the other regulators, yes.
Okay. I appreciate that because minority communities are hurting right now, and this needs to be a priority. The pandemic has brought to light how severe the lack of credit and investment dollars problems are for minority small business owners, and I think it's past time for our regulators to work together and issue an updated and effective CRA rule. So I look forward to your leadership. Ms. Thompson, New Jersey is what I call a blue chip state, a state that spurs innovation and drives the nation's economy. According to U.S. News & World Report, New Jersey has the second best public school system in the country and the highest per capita income in the country. In other words, we do a great job of educating our kids and giving them the ability to reach their potential. That's not just because New Jerseyans are smarter than their fellow Americans, but it's because we invest in our people. So this is a state that's part of a region that generates 20% of GDP for the entire nation. So we make money for the federal treasury. But as we met yesterday, and I appreciated our visit, I explained how many New Jersey homeowners are being hit with a 1-2 punch of rising flood insurance rates, an unfair cap on state and local tax deduction, the oldest deduction in the federal Internal Revenue Code, and based on thanks to the Trump tax bill, which we're fighting to reverse both of those bad policies. But I want to make sure that as director of the FHFA, you're sensitive to the concerns of homeowners, not just in New Jersey, but other high-cost states. Yes, we want to be fiscally responsible to the entities, the GSAs that are under your purview, but we can't simply do it on the backs of those that are actually generating revenue for the federal treasury. Can you comment on that?
Sure, Senator, and thank you for the question. Certainly, we care very much about the high-cost loans. As you know, last year we had a historic increase in home prices, and that hit states that have high-cost areas probably harder than most. One of the actions that we undertook was to increase the fees for some of the higher balance loans, and that may unduly impact a number of countries, a number of counties across the country. I think most of the country is not impacted, but there are about 104 counties across the country that are. Having said that, we do recognize that there is a difference between buying a home in New Jersey versus buying a home in Aiken, South Carolina. And we have excluded from this fee first-time home buyers with area median incomes less than 100%. And we've also excluded our affordable products so that there is no fee associated with first-time home buyers who live in high-cost areas. But we know that there is a huge affordability issue, especially with first-time home buyers, and we did not want to exacerbate that problem.
Thank you. Finally, Governor Brainerd, the Fed has a serious diversity problem, something I keep pressing. I had it with Chairman Powell, and I am compelled to raise it with you as well. If you're confirmed, what steps are you going to take to improve minority representation, particularly Latino representation, which is among the worst of the diversity that exists at the Federal Reserve?
Well, thank you for your question. So I think the Federal Reserve was actually founded on a recognition of the importance of bringing a diversity of perspectives to the table. That's why we have 12 reserve banks all across the country, and we have branches in communities all across the country. So we have regional diversity. We've always valued sectoral diversity. It's very important to have different kinds of backgrounds, but we really have lagged on racial and ethnic diversity. We're seeing some very important changes that we've worked very hard on at the reserve banks in terms of the boards of directors. If you look there at Latino representation, it's gone up threefold just in the last 4 years. And so now we have about 25% of our Class C directors are Latino. We have about a third that are Black, and we have now more than half who are minorities of one sort or another. So we've made progress there, but in terms of actual leadership positions, we've only ever had one Black president. We've never had a Latino president. And so, that remains a very high priority. Many of those boards have spent a great deal of time making sure that we have more diverse pools of candidates and that our procedures in hiring are as good as best practices everywhere. And why? Because we know, as those who wrote the Federal Reserve Act knew, is that having more diverse perspectives at the table, diversity of every type, leads to less groupthink and better outcomes.
Thank you, Mr. Chairman.
Thanks, Senator. Senator Rounds of South Dakota is recognized.
Thank you, Mr. Chairman. Let me begin by saying thank you to both of you for your continued participation in public service. Ms. Thompson, in September, the Fhfa, under your leadership, proposed a capital framework which offers a stronger incentive for the GSEs to create credit risk transfer, or CRT, relative to the current capital regime. I think you began and you visited a little bit about that with the chairman of the committee here. I'd like to explore that a little bit more because I believe that this is a legitimate tool. And I'm just curious, can you share with me briefly your philosophy on the CRT and how you might utilize it further if confirmed?
Sure. Thank you for the question, Senator. I firmly believe that the credit risk transfer program is very important for the enterprises. As I mentioned earlier, Fannie and Freddie are the largest holders of mortgage credit risk in the world. And right now, Fannie and Freddie, they're able to retain capital, but they are not able to, they don't have enough capital to withstand a severe event. And so if something really, really bad happens, the event will have to be paid for once again by the taxpayers. And it is important for us to continue to encourage the credit risk transfer program so that the taxpayers are not on the hook for any extreme events, and that private investors are having to engage in the credit risk decisions. We just believe that it is critical for the enterprises, especially while they're undercapitalized, to continue to transfer credit risk away from the taxpayers and into the hands of private investors.
Thank you. Governor Brainerd, first of all, thank you for the meeting the other evening in my office. I most certainly appreciated our conversation. I think a number of the concerns that our ranking member has shared with you, you've had an opportunity to respond. I am curious specifically on an item that you and I spoke on very briefly, but I'd like to have a conversation here as well. And I made a similar request like this to Chairman Powell on Tuesday. I believe the adjustments to the supplementary leverage ratio, or the SLR, are necessary in order to account for the large influx of cash that has become challenging for banks to manage. Would you be willing to work with my office to look at ways to address the liquidity issues through the calculation of the SLR?
Yeah, well, thank you, Senator. And I certainly share that view that because of the need to respond to the pandemic, there's a lot more reserves in the system. And I supported the removal of the reserves from the leverage ratio for custodial banks. And I think it makes good sense to look for ways, while keeping capital strong, to find a way to adjust that supplemental leverage ratio because of the much larger amount of reserves in the system.
Thank you.
I do commit to working with you.
Thank you. Also, let's talk a little bit about inflation. This is critical. We're at 7% right now. Stated goal is 2%. We've got 5 percentage points. Critical. I think in our discussion with Chairman Powell, he made it pretty clear that the Fed could manage the demand side, and I think you would agree with that. Demand is where you work at, not necessarily on the supply side. Fair enough?
Absolutely. I think over the medium term, inflation is a monetary phenomenon, and we have tools that operate on the demand side.
Okay. In order to move that back, and I know that you've made it very clear that this is a critical priority, how much of the inflationary trends that we see today do you think you can actually manage with demand-side policy only?
So I think, we have a set of tools. They're very effective, and we will use them to bring inflation back down. Sector to sector, there are microeconomic, market structure, other issues at work, supply disruptions at work. That's not where our tools are effective. That lies elsewhere. But we are committed to using the tools that we have to deal with inflation, which is fundamentally a monetary phenomenon.
What I'm trying to get at, and this is not a gotcha question. My question really is, with inflation where it's at, we know it's both supply side and it is demand side. But clearly there's been discussions, and clearly you have research done as to how much of the inflationary trends that we have are attributable to demand-side policy. Can you share with us what you believe the percentage, or at least the amount of inflation would be attributable to demand side? And the reason why I ask is because if you overreach or if you don't do enough, you're never going to get it down. But at the same time, with supply side, and we both recognize you can't do much about supply side, and this is critical. The price of gasoline is going up because we've got restrictions on the availability of new gasoline being put into the system, and high demand for gas. But simply telling a consumer that the price has gone up and so we're going to make it more restrictive for you to buy it, they're still going to buy gas because they've got to get to work. So in this particular case, as we look at food prices going up and we look at gasoline going up, price of rents is going to be going up, price of housing is going up, how much of that interest on inflation do you have the responsibility, or should you be looking at in terms of the demand side of the equation?
Governor, be as brief as you can in your answer, please. Thanks.
Well, I'll certainly, just looking at prices at the pump, prices at the grocery store, that is clearly hurting Americans all over the country. That's about a quarter of the very high inflation that we see. So I think you're certainly right to focus in on those areas as particularly difficult and very rooted in supply-side constraints.
Thank you,
Mr. Chairman.
Senator Tester from Montana is recognized from his office.
Well, thank you, Chairman Brown, and I want to thank Director Thompson and Governor Brainerd for being here today. Director Thompson, you said something in your opening statement that is something I think we need to pay attention to, and that is the ownership gap today is wider than it was in the 1960s when discrimination was legal. This is a question for you, but then if Governor Brainerd wants to add to this, I would certainly like to hear her opinion too. But what can you do about closing that ownership gap in the position that you're going to be hopefully confirmed for?
Thank you for the question, Senator. Access to credit is really important, especially in minority and underserved communities generally. And I mentioned earlier that we've asked the enterprises to develop equitable housing plans that focus on some of the inequities that have taken place. They are supposed to identify barriers for underserved communities, particularly Black and Brown communities, to engage in home ownership. And we're looking over those plans now, and some of them focus on education and making sure that opportunities are available for people to understand, what the homeownership process is, how it works, what it does. And then if there are other issues like appraisals that come into play in terms of bias that may or may not exist. And we want to make sure that the enterprises are focused on identifying barriers and focusing on coming up with plans to address and identify those barriers to really close the homeownership gap. Because as you know, Senator, a home is the greatest asset that most people own, and we believe that homeownership will go a long way towards closing the racial equity gap.
Governor Brainerd, would you like to respond to that same question? What can you do in the position that you're going in for to solve this ownership gap?
Well, thanks for the question, Senator. So we are well aware of that home ownership gap. We collect those statistics, and it's been very, very stubborn. We do work with banks trying to provide help and incentives under the Community Reinvestment Act to increase the supply of affordable housing, workplace housing. We know there's shortages in all of the communities represented by members of this committee. I've visited many of them. And in particular, we have community development financial institutions who are very good at using LIHTC subsidies and other subsidies together with bank financing, and that's really where the Community Reinvestment Act comes in to expand the supply. We're looking also at naturally occurring affordable housing. That's one of the questions we asked in the CRA. Native CDFIs, for instance, are very good at working on very particular issues affecting tribal nations. So getting incentives for banks to partner with those institutions can help on the margins.
Thank you for that. I would also say that you know this, I think you both know this, there's an incredible supply problem out there across this country, which has caused housing prices to go up. If you have any ideas, any recommendations about what Congress can do to help solve this problem, I would certainly would love to hear them. I know the Build Back Better proposal that may or may not be going anyway at this moment in time had some housing initiatives in it that I think could have been positive if they were passed in the way that I saw them to solving some of the supply problems. Governor Brainerd, I want to continue with you for a second. You and Chairman Powell have clearly worked pretty well in a partnership during your time together at the Fed, and I know this will continue. I gave Powell the opportunity to share his view earlier this week, and I want to give you the same. I remember very clearly the pressure that President Trump put on the Fed for his own political gain, not the well-being of the economy. And I am grateful for you and your colleagues' commitment to the independence that you maintain in the Fed through that intensive pressure. So can you tell me briefly, why is this independence so very important?
Well, I think it's a long-established tradition at the Federal Reserve, and it certainly is important to be able to set monetary policy in a way that is closely related to the goals that Congress set for us, and we need to make judgments in the committee free from political pressures, and that's what we've been able to do under the independence of the Fed, and it's important to keep doing that. I'll certainly continue to support Chair Powell in that.
Thank you both.
Thank you, Senator Tester. Senator Kennedy from Louisiana is recognized.
Thank you, Mr. Chairman. Governor, Director, congratulations on your nomination. Governor, I realize at the Federal Reserve that you have a big staff that advises you on inflation. And based on their track record, my guess is they also advised people to buy condos in Las Vegas in 2007. But you don't have to accept their advice. So with respect to your predictions on inflation, how did you get it so wrong?
Well, Senator, thank you.
Could you move closer to the mic for me?
Yes, of course. Thank you for your question, Senator.
You're welcome.
So I think, nobody got the pandemic right. The pandemic is unprecedented.
Yeah, but I'm asking you about inflation.
Yeah, so I think as forecasters, private forecasters, certainly the forecasters, the SEP, the whole committee, we thought that perhaps we would see a more rapid resolution of the pandemic and the supply-demand mismatches, so in particular in cars.
Excuse me for interrupting,
energy.
but I don't have much time. Do you think are you saying that inflation was caused by the pandemic?
So we certainly have seen the perpetuation, for instance, of the Delta variant leading to
yes, ma'am. But are you saying that the inflation is caused by the pandemic?
I certainly think the supply-demand imbalances that have been the biggest contributors to the very high inflation we've seen are directly attributable to supply chain issues, distortions in demand.
Well, but here's what troubles me about that. I'll agree that inflation is spreading, but I don't see people going around coughing inflation on each other. I think, and I understand supply chains matter, but so does the demand side, and so does too much money chasing too few goods. And I don't think, and I don't think any fair-minded person thinks that inflation is solely the result of the pandemic. Let me move on. Do you think that federal regulatory authorities should use their considerable power, not just the Federal Reserve, but federal regulatory authorities? Do you think they should use their considerable power to discourage private banks from lending money to oil and gas companies?
No.
Ma'am?
No.
Okay. Do you think that those federal regulatory authorities should use their power to discourage private banks from lending money to gun manufacturers and dealers?
It's not our job. We don't tell banks what sectors to lend to. We just ask them to risk manage, and we make sure they have good processes in
Well,
place.
I agree with you, and I thank you for that. Will you issue a statement to that effect if you're confirmed?
Well, I certainly have made that statement. We'll continue to make
Yes,
that
ma'am.
statement.
Would you issue a separate statement saying, I want to make it clear for what it's worth to all of my colleagues in government, I don't think that you should use your power to discourage private banks from lending money to oil and gas companies and to gun manufacturers.
Well,
Will you do that?
Well, I won't tell other regulators what to do, but I will be happy to talk about what we do at the Federal Reserve, what our statutory authorities require us to do.
Okay. I'm going to follow up with you on that. Okay?
Senator?
I take that as a yes, and I'm looking forward to that statement. Director, gosh, this is America's debt. I'm not going to have time to ask you about it because I want to ask Director Thompson a quick question. Yes, Director Thompson. Madam Director, are you familiar with President Biden's risk rating 2.0 pricing scheme for the National Flood Insurance Program?
Sir, I'm not familiar with the details of that program.
Well, I need you to take a look at it. You talk about affordability. President Biden is about to make housing for at least 5 million Americans unaffordable by raising their flood insurance from $1,000 a year to $5,000 and $6,000 a year, and you're going to have a problem. Real quickly, Madam Governor, do you think we've got 4 big banks? They have market share between 30% and 50% in the greatest economy in all of human history. They're not really banks, they're countries. Do you think economic power is too concentrated in those 4 banks?
Well, I certainly think that from a financial stability point of view, when you have very, very large institutions that are systemic, you need to have very, very big capital buffers and liquidity buffers and risk management, because it would be very, very difficult to resolve those banks in a moment of financial stress.
Okay. Thank you, Mr. Chairman. You've been
Thank you,
very,
Senator
very
Kennedy.
kind with your time. My office will work with you on that statement about oil and gas and gun manufacturers.
Thank you, Senator.
Okay?
Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. I want to, first of all, take a moment. I know normally in the Banking Committee we don't introduce our witnesses, but I want to take a moment to add to your comments about Dr. Brainerd. I've known Lael and her family for more than 20 years. I think she has done a great job on the Federal Reserve. She's been the representative from the Federal Reserve Bank of Richmond's 5th Federal Reserve District. She cares deeply, and as you indicated in her opening statement, about working families. She is ready to roll up her sleeves to take on the challenges that our economy faces. And I think a prime example of that is what happened during the last year of the Trump administration, when we got hit with COVID, and candidly, if that administration had responded quicker. We might not be in as deep a hole as we were, but she worked the Fed. She and Chairman Powell worked very closely with Secretary Mnuchin, and I think in many ways prevented what would have been an economic catastrophe. So I very much look forward to supporting her. I would say to my good friend from Louisiana that when we were passing unprecedented amounts of money to put that capital into American families' pockets, I didn't hear anybody complain about inflation. I think the first $3 trillion, $2.2 trillion was 100 to nothing. I think the next couple trillion was 96. I'll give Senator Kennedy credit on that, but the vast majority of us on both teams said that was the right thing to do. I think history will treat it as the right thing to do. And I hope the Fed moves aggressively on dealing what it can do on monetary policy. But I would say, and I wish we had all been a little more prescient about the challenge of inflation. We know when gas prices go up. But if we were looking at the indicators, and if we were looking at the indicators, for example, that President Trump always used as his best weather vane, when he stuck his finger in the air to say, how's the economy doing? He'd look at the stock market. Well, inflation hit 7% number the other day. What'd the market do? It went up. So again, I'm not saying that the market makers are smarter than us senators, but the market's weighed in on this. If we look back as well to like the early 80s, when we saw, our late 70s, when we saw the kind of inflationary pressures, kind of when inflation, I think, hit 7%, 8%, before it went up even higher, interest rates were about 16%. They went higher than that, but they were at 16%. Right now, interest rates for 30 mortgages, about 3%. So the market, at least, and boy, oh boy, I bet Dr. Brainerd and I bet Jay Powell wish they'd never heard of the word transitory, because we're going to probably continue to fry them on using that term. But I would say that the market indicators, the market, interest rates, and candidly, the fact that most of us on both sides were all in on making the investments to deal with COVID. I want inflation to go down, but I think, and I do think we will start to see move down. And incrementally, if you look at the rise and you're looking at slow declines, but I do hope the Fed will act. I do want to raise one issue, and again, I want to come back and compliment my friend, the Senator of Louisiana, and my friend, the Senator from North Carolina, because one of the things that I think we did that was really bold, along with help from all the folks on this side of the aisle, was we said we need to get more capital out to disadvantaged communities during COVID. I think Director Thompson, I want to commend her. I may not get to my question on her, but I want to thank her and the fact around, I'm not going to get to GSE reform, but I commend you for saying you're still open to that, and the fact that in housing finance reform, I know how challenged that area can be. As somebody who worked with my friend Bob Corker on GSE reform and still got the scars to prove it, the fact that you've got the bankers and the civil rights community supporting you, I look forward to supporting you as well. But I do want to get my one question in, which is one of the things that we came up with, actually working with Secretary Mnuchin, was trying to put more capital into minority depository institutions and CDFIs. And again, want to thank my Republican friends for helping on that. We put about $12 billion out. We're almost going to double the amount of Tier 1 capital in that sector that by definition lends to low and moderate income individuals, more than 60%. And Director Brainerd, if you could just weigh in on what other things we can do, because there are certain things. There are private capital that wants to go into these institutions but can't because they're afraid of the change of control rules. Will you commit to work with me and others on this committee in a bipartisan way to make sure that this piece of our financial sector, CDFIs and MDIs, get the kind of regulatory relief and capital they need to continue to perform critical services?
Yes, we will, Senator.
That was a pretty quick answer. Thank you, Mr. Chairman.
Both witnesses are good at quick answers. Senator Tillis from North Carolina, who always stays within his 5 minutes.
Thank you, Mr. Chairman. I do, and I will. Congratulations to both of you on your nominations. It should be a proud moment. Ms. Brainerd, consensus has long been a top priority of the Fed board as it works on an apolitical and largely unified front on monetary policy and regulatory decisions. If confirmed, you're going to be elevated to the position as vice chair. So with this in mind, would you believe the elevation of your role to vice chair provides you with any special power or authority to set board agenda items?
No, quite the reverse. The vice chair role traditionally is a role that supports the chair in the formulation of monetary policy and achieving consensus at the FOMC, communicating that, and I look forward, if confirmed, to taking on those responsibilities.
That's good to hear. I agree. In your time on the board, you've been called the Fed's great dissenter. Your initial dissent in 2018 was the first time over 6 years that a governor has issued a dissent. You've since set a new precedent with more than 20 dissents, none of which I believe were joined by another Fed governor. The Fed's meant to be a collaborative institution. I think we all know that. Governors have to convince other members of the benefits of proposed changes or reforms. So given the longstanding precedent consensus had on board activities prior to your term, as vice chair, would you push for policy changes like board consensus?
No, I always work really hard. In fact, have put forward a number of rules that did achieve consensus. It's always my preference. I dissented rarely. I always supported implementation of the law, especially of S2155. There were some provisions that I particularly liked in that, and I've said that publicly. I only dissented on areas where I thought they went to the resilience of the largest institutions because of the potential financial stability implications, and only in areas that were outside the implementation of the law and really in the judgment of the board. And when I did, I always worked with Vice Chair Quarles, Vice Chair Powell, to let them know what concerns I had, to see if we could arrive at an agreement. I would always give them my statements ahead of time to let them correct me if I got something wrong and to rebut it. So I always tried to be extremely collegial. I did not relish dissenting at all, and only did it in a few cases that were around those core issues around the largest institutions.
I want to get on your political activity. I think that you may have said that your behavior would be different going forward. We know that you gave a max contribution to the presidential campaign for Hillary Clinton in 2016. And I think that's probably the only Fed governor that's done that in nearly 22 years. I know of some who were politically active, but after they were confirmed as governor, they eliminated their political activities. So why did you think donating to the Clint campaign outweighed the importance of maintaining Fed's independence?
Well, I actually did that in consultation with our ethics officer. Of course, we,
Did they make it clear that that hadn't occurred in quite some time?
No, unfortunately. It is rare. It has occurred. It's certainly not something I've done since then. I, do not think the appearances issue is a good one for the Fed. So I haven't done it, but yes, it's clearly permissible, not something that I would have done had I been there longer and understood that was not customary.
Thank you. Ms. Thompson, can you provide more clarity about the prospect of Fhfa eventually releasing Fannie Mae and Freddie Mac from conservatorship? Is there an anticipated time frame? And are you concerned about any negative market impacts?
Senator, that's a great question. Certainly, we would defer to Congress on the exit from conservatorship for the GSEs. But in the meantime, there are a number of things that we're doing. The enterprises are building capital. We are encouraging the credit risk transfer program, and we're establishing pricing. So we are also supervising them in a safe and sound manner and making sure that they meet their mission, so that whenever they exit from conservatorship, they will be ready. I'd also mention that there are a number of stakeholders that would likely need to be involved and engaged in a discussion before that ever happened. The Treasury, certainly as the owner, majority owner of the GSEs, and certainly want to make sure that the taxpayers are adequately compensated. We'd probably have conversations with the Fed and also the Justice Department on outstanding litigation. So just a number of steps that would have to take place before the enterprises would be able to exit conservatorship, and they'd have to meet their capital targets, which are quite vast.
Thank you. Again, congratulations. Thank you, Mr. Chair.
Thank you, Senator Till. Senator Warren from Massachusetts is recognized.
Thank you, Mr. Chairman, and congratulations, Governor Brainerd, and congratulations, Ms. Thompson, on your nominations. So I'd like to talk a little bit about inflation and about the Fed's tools to deal with it. Governor Brainerd, let's start at the beginning. If the economy is overheated, what is the Fed's primary tool to cool it off?
The federal funds rate.
Yeah, so increasing interest rates, in other words. But what if inflation is caused by kinks in the supply chain? Prices jump because the supply chain is just not functioning. Does the Fed have a tool to deal with that?
No, we have a tool that operates on the demand side, which is the federal funds rate.
Okay, in other words, interest rate adjustment is your tool, and it doesn't work on things like supply chain kinks. When Chair Powell was here on Tuesday, we discussed how market concentration can lead to increasing prices. While consumers are facing higher inflation, profit margins for corporations have surged to their highest levels in 70 years. Now, inflation hasn't gone up because one day corporations woke up and said, hey, today we're going to be greedy. No, inflation has gone up at this moment because of the way that prices are passed on in a more concentrated market. In a highly competitive market, when costs go up, businesses pass those costs along to their customers, but they can't expand their profit margins because other competitors are just going to beat them down on prices. But in a very concentrated industry, one with only a few competitors, a dominant corporation can use the excuse of inflation for passing along rising costs and then add in an extra bonus for themselves to increase their profit margins. As Chair Powell put it on Tuesday, those firms are, quote, raising prices because they can. So, Governor Brainerd, would you agree that increased market concentration has allowed some corporations to profit off pandemic disruptions by raising prices on consumers beyond the increased costs that the corporations have to deal with?
Well, certainly a lot of economic research would suggest that in concentrated industries, individual producers have more pricing power. So that kind of dynamic is certainly possible.
Okay, so I know that the Fed has a role in approving bank mergers, but with respect to broader concentration throughout the rest of the economy, does the Fed have the tools to deal with increased concentration there?
No.
No. And that's really the point here. Dealing with inflation requires the Fed to act if the problem is an overheated economy. But dealing with rising consumer prices also involves the FTC, the Department of Justice, in breaking up monopolies and investigating crooked price-fixing schemes that also increase costs for hardworking families. And that's why it is so important that the Biden administration is taking action to fight corporate power by enforcing antitrust laws and boosting competition. Now, Governor Brainerd, do you think that the steps that the administration is taking to address market competition and price fixing have a role to play in helping families that are facing rising prices?
Well, I certainly think that, we're hearing from working families around the country about inflation, and some of it is in areas where we're seeing those kinds of supply dynamics. But again, we do have a powerful tool, and we are going to use it to bring inflation down over time.
Good. And look, I understand that, but price stability is a core part of the Fed's mandate, and I know you care about that. And I just want to make sure that we keep our eye on all of the things that affect prices for consumers. Today's price increases have many causes, and I hope that the Fed treads carefully in using its tools to help lower prices for American families. I am glad to see that the administration is using all the tools that it has to bring down prices over a longer arc. That is our collective job, and I appreciate your help in this and your thoughtful comments here. Thank you, and again, congratulations to both of you. I'm sorry, Ms. Thompson, that I didn't get to questions with you, but I'm looking forward to supporting both of you. Thank you. Thank you, Mr. Chairman.
Thanks, Senator Warren. Senator Haggerty from Tennessee is recognized.
Thank you, Chairman Brown, Ranking Member Toomey, for holding this important hearing. And I'd like to congratulate our nominees. Governor Brainerd, Acting Director Thompson, congratulations on your nominations today. It's good to be with you, and I appreciate your time. Before we start, I'd just like to highlight the fact that we are in an unprecedented time. Governor Brainerd and I talked about this yesterday, but if you look at the Consumer Price Index that was released for this month, over December over the prior December, we're at a high that hasn't been seen in almost 4 decades. The median age in America is 38 years old when you think about it. The average American has never seen inflation at this level. So I want to underscore the fact and appreciate the confidence you reflected, Governor Brainerd, in your ability to deal with this very carefully as we try to undertake the challenge and get price stability back under control. For both of you, I have a housekeeping question to ask before we get started, for both Governor Brainerd and Acting Director Thompson. As a matter of housekeeping, have either of you ever, currently or in the past, embellished any part of your resume, your background, your publications, or any other aspect of your accomplishments? Just a yes or no answer would suffice.
No.
I expected that to be the case. Thank you. Governor Brainerd, I'd like to turn to you. Again, I appreciated the conversation that we had yesterday. And one of the topics that we discussed is also one that I raised with Chairman Powell on Tuesday when he and I discussed, and that's regarding the actions of CFP Director Rohit Chopra and Interim FDIC Director Martin Grunberg in their attempt to force out the FDIC chairman before her term expired. This destruction, both of institutional norms and historical precedent, undermines the independence and the integrity of our financial regulators. And I want to ensure that a similar situation does not occur at the Fed. So my question, Governor Brainerd, is slightly different from that you answered with Senator Tillis. Do you believe that the Fed chair has the ultimate discretion to set the Fed's regulatory agenda?
It's certainly the case that the vice chair for supervision and the chair work together. But yes, the chair determines what goes to the board for votes.
Thank you. I appreciated your answer yesterday, and thank you for being clear today. Acting Director Thompson, I'd like to turn with you about the stewardship of the FHFA, if I might. As director of the FHFA, you're meant to carry out the law, not to be a policymaker. The Housing and Economic Recovery Act does not permit indefinite conservatorships. By definition, no conservatorship is meant to be permanent. So my question of you is, will you commit to do everything in your power to fulfilling your statutory mandate to end the conservatorships?
Senator, that's a great question, and certainly no one ever expected the enterprises or any financial institution to be in conservatorship for 13 years. And certainly we believe that Congress has a role, and we will be working to help in any way that we can facilitate any questions that you have. But we think that this is something that Congress needs to work on as well.
Well, is there any point in the law that says that Congress must approve an exit for conservatorship?
I don't know that they must approve an exit from conservatorship, but just in terms, there are a number of issues that Congress will have to address, specifically if the enterprises exit conservatorship, will the companies be private? Will they be public? What form will they be in? There's just a host of issues that would have to be considered that Congress must weigh in on. But certainly FHFA can get the enterprises ready.
Well, Acting Director, if you're concerned that the HERA Act does not provide adequate clarity, I hope that you will get back to me and my team as quickly as possible with the areas that you see inadequacy in the legislation, because my expectation is that the legislation is clear and that an exit is called for. I want to get to another point, though, and that has to do with the recent reductions in GSE capital requirements and how you see that reduction fit with the mission of working toward exiting conservatorship.
It's a great question, Senator, and I can assure you I firmly believe in safety and soundness of the GSEs, and that would be really backed by the capital requirements. I made 2 minor changes to the capital rule that was finalized at the end of December, And those changes were really designed to promote the utilization of the credit risk transfer program. And again, the credit risk transfer program transfers mortgage credit risk from the enterprises to the private sector. We also made a change to not the leverage requirement, but the leverage buffer, so that the buffer would not be static, it would be more dynamic. And I believe the banking regulators are also looking at the supplementary leverage ratio on the banking side as well. The changes that I made, just for context, before the crisis, the required capital for the enterprises was about $55 billion. Right now, even with the proposed changes that I've recommended, the required capital is about $300 billion, which is over 5 times what it was before the enterprises went into conservatorship.
I just think we need to be careful in this regard, because in my home state of Tennessee, housing prices are up 20%.
Agreed.
That's the case across the board. And I, again, back to your overarching objective of getting these out of conservatorship, I applaud a careful balancing act, an independent perspective on that as well. And I look forward to very conservative management there. Thank you.
Thank you, Senator. Senator Van Hollen of Maryland is recognized.
Thank you, Mr. Chairman. Congratulations to both of you on your nominations. You're both eminently qualified for the positions you've been nominated to, and I look forward to supporting your nominations. Dr. Brainerd, let me thank you for your leadership in getting the Fed to adopt a real-time payment system through FedNow. As you know, people living paycheck to paycheck are spending billions of dollars in overdraft fees or payday loans because of the lack of a real-time payment system. And they're bearing the costs of this inefficiency in our system. So I have a very simple question. Are we on target for launching FedNow next year?
We are on target, and as you say, it's something that many community banks, other payments providers, and community groups are very supportive of, and I think larger banks are very supportive now as well.
Good. No, I'm glad that more and more people are supporting the effort. As Chairman Powell acknowledged in his testimony before this committee on Tuesday, because of the American Rescue Plan, we've been able to lower unemployment in the country way ahead of projections. At the 3.9% unemployment levels we saw in December, that was a full year, hitting that target a full year before what the Fed had projected and 4 years before what the Congressional Budget Office had projected. So that's the good news. On the other hand, we see disparities behind that number. Black American unemployment is at 7.1%, and while long-term unemployment has been cut in half over the past year, we still have about 2 million Americans who are long-term unemployed, looking for work and not finding it for over 27 weeks. So how will these facts factor into your analysis in considering whether we have achieved one of the main Fed goals of full employment?
Well, as you noted, unemployment has come down very rapidly, which is very welcome. But we still have between 3.5 and 5 million fewer jobs than we would have in the absence of the pandemic. And some of those are going to come back more slowly. So as we look at labor force participation, we just really haven't seen the improvements there. It's, between 1.5 percentage points looking at the total labor force, 1.1 percentage points looking at the prime age labor force behind where it was pre-pandemic. So that unemployment rate is higher when you take into account non-participation. Where are those people? Well, we see very big concentration of missing jobs in leisure and hospitality, despite a lot of openings. I think, you have a lot of parents there of young children when we look at the data who still can't quite go back because you've got school closures and particularly for young children, still very, very limited childcare options. Similar, and of course that hits Black and brown parents more in terms of the statistics, and also concerns about the virus some sectoral reallocation. So we're going to see that participation cycle lag the unemployment cycle, but I have really strong confidence that we are going to see that improve more slowly over coming quarters and years.
Thank you, Dr. Brainerd. As you know, when we look at those figures, over 7% for Black American unemployment, those are people who are looking for jobs and unable to find them. On top of that, we have the issue of people who are not looking for various reasons, and many of us are pushing very hard to pass legislation to dramatically lower the cost of child care for those families. Ms. Thompson, thank you for your current stewardship at Fhfa. And as you know, and we've been back and forth on this, one of the major costs, household costs faced by moderate and low-income families are their energy costs. In fact, for low-income households, the share of their budget on energy is 3 times higher than for higher-income households. And if we can make energy efficiency improvements, we can cut those bills by 35%. I wrote to you last August about this issue, urging you to take actions to encourage more loans for energy efficiency. Thank you for the actions you took in October. Can you just elaborate a little bit on the importance of this issue and whether there are other measures we can take to reduce these costs for households?
Sure. Thank you for the opportunity, Senator. We believe that the energy standards have come a very long way since the enterprises started engaging in ensuring that the affordable housing units, in particular on the multifamily side, had these energy efficiencies. We are encouraging the enterprises to, especially in the low income and affordable space, make sure that the loans that they purchase have a component of energy efficiencies. And I do believe that they give discounts for purchasing those loans.
We're to continue to work with you on that and other aspects of affordable housing. Thank you, Mr. Chairman.
Thanks, Senator Van Hollen. Senator Lamas from Wyoming is recognized.
Thank you, Mr. Chairman, and congratulations on your nominations, both of you. Acting Director Thompson, we haven't met. I hope we'll have an opportunity to do so in the near future. Governor Brainerd, thank you very much for the time you've spent with me and the conversations we've had in the past year. I appreciate that very much. Governor Brainerd, my questions are for you.
Okay, thanks.
As we've discussed, Wyoming is the largest exporting state of energy in the nation. And that's because of our small population. We don't consume very much of the energy we produce. We export it. It is critically important to our economy and to our job base and to American energy independence. Do you believe the Federal Reserve has the authority, either through rules or guidance, to broadly curtail community banks' investments in oil, coal, or gas exploration?
No. No, Senator.
Thank you. Do you understand the regulatory burden that incorporating climate risk into bank regulation may have on community banks in Wyoming?
I do, and I don't favor asking community banks to put in place those kinds of risk management. I think to the extent that a supervisory guidance is appropriate, it's really appropriate for the large banks that have a big imprint, not for small banks. We don't want to burden community banks in particular.
Thank you very much. Community banks in my state are the backbone of banking, but again, because of our very small population. So thank you so much. As you know, I have a keen interest in Wyoming's special purpose depository institutions applications. Is it a fair characterization to state that the Federal Reserve is currently making progress on the important legal and supervisory issues surrounding the Wyoming Special Purpose Depository Institution?
Yes, I think that's an accurate characterization, Senator.
Thank you. Tell me why you believe responsible financial innovation is important to both monetary policy and bank regulation.
Well, we're seeing quite a bit of innovation associated with technology. Consumers now have access to their ability to make transactions using their mobile phones. These kinds of things, I think, are very important. They're going to continue to evolve. The financial sector has been a very dynamic sector. I think it will continue to be, and we just want to make sure that that's done within the existing guardrails so that like activities are regulated in a like manner, consumers are protected, and that's really our focus on responsible innovation.
Do you believe it's important that innovative financial technologies like digital assets and distributed ledgers be inside the regulatory perimeter?
Yeah, I do believe that, again, the focus should be on like activities, like risks being treated in a like manner. And, of course, our existing regulatory structure was designed for different kinds of charters and institutions, and so that needs to be evolved. And, of course, we welcome Congress taking a very important role in updating that statutory framework.
Okay. China has produced a digital yuan, a central bank digital currency, but it seems to be available to the retail customer, allowing the Communist Party of China to surveil the uses of its central bank digital currency. As the Fed and the Congress considers a central bank digital dollar, do you believe it should be available to the retail customer, or should the Fed's CBDC be available only as it is now to the banking industry?
Well, this question about digital currency is a big question, and we really are looking to Congress in the first instance and the administration to give us guidance in this area. We want to make sure that we do the requisite research on policy and technology so we're in a position to move forward if Congress decides it's important to be able to compete with China in this regard. Of course, privacy protections are very important in any kind of approach that might be taken.
Thank you very much. Again, congratulations to you both on your nominations. Mr. Chairman, I yield back.
Thanks, Senator Lummis. Senator Smith from Minnesota is recognized.
Thank you, Mr. Chair and Ranking Member, and welcome to both of you. It's wonderful to have a chance to see you in person after our virtual meetings, and I want to thank you so much for your willingness to serve our country. And Ms. Thompson, I'm going to start with you. As I said when we spoke on the phone, it warms my heart to see a career public servant have the opportunity to, and for us to have the opportunity of you leading this agency. So thank you so much. I want to follow up on a question that Senator Brown started with, touching on issues of gaps in home ownership. And in Minnesota, though we have much to be proud of, we also face significant challenges around racial equity, which is essentially the proposition that prosperity in our state should be equally shared. And the reality is that in the Minneapolis metro area, as you may know, the home ownership rate for white families is one of the highest in the country, about 70%, while home ownership for black families is closer to barely 20%. This is the largest gap in the whole country. And I might just note that this is the legacy of old federal policies that contributed to this, and in addition to old redlining. University of Minnesota has done a fascinating study which tracks specifically that legacy in home values. Today, you still see the legacy of disparities in home values because of this. So, Director Thompson, could you just talk to us, if you're confirmed, which I hope you will be, how you see the work that we have to do ahead to address this home ownership gap, which contributes directly, of course, to wealth inequality that we face in our country?
Thank you for the question, Senator. And there is quite a bit of work that needs to be done in that area. We do believe that qualified borrowers ought to be able to, if they can afford a home mortgage loan. One of the things that's taken place at Fannie Mae in particular is many potential homeowners are now renters. And when you're looking at credit scores, one of the things that the traditional credit score does not take into consideration would be rent payments. And typically, a rent payment or a mortgage payment is the largest payment that most people have for their households. And so Fannie Mae has taken the step to incorporate 12 months of positive rental payment into their credit scoring so that the typical requirement of something being a debt as opposed to an expense, which is what a rental payment is now taken into consideration in a positive way to help improve the credit scoring process. So we think there are a lot of little things around the edges, looking at non-traditional credit scores and not using them as sole factors, but as additional factors in really providing sustainable access to credit into homeownership.
I look forward to working with you on these things. I think you're pointing out how we have sort of old systemic ways of doing things that end up having a discriminatory impact. And if we look at them, we can change them and then start to change the path, create a much better path for people in this country, which is why we're here. So thank you. Dr. Brainerd, you and I had a chance to talk about a variety of things when we spoke on the phone the other day. Many of my colleagues have also just raised some of the questions that you and I were discussing around full employment and the disparities in employment amongst black families versus white families in this country. And I want to just drill down on a bit of what Senator Van Hollen was asking about. As you pointed out, the Fed has limited tools in this category. But could you just tell me, if we were to see interest rates increase, what impact would we anticipate that having on employment, particularly as we try to look at getting broad-based employment?
Well, certainly today we see an economy that's grown about 5.5% over the last year, and we've seen those broad unemployment numbers coming down really quickly. So there's a lot of underlying momentum in the economy. And so, as we go forward on our plans to end asset purchases, to begin to raise interest rates at sometime beyond that, to shrinking the balance sheet, I think we'll do it in a well-communicated way, a transparent way, to allow markets to react in a measured way to it. And I believe we'll be able to see inflation coming back down to target while the employment picture continues to clear. There are some short-term constraints there that I think are limiting people from coming back into the labor market. As those are lifted, I think we'll have continued gains on employment.
Thank you. I'm out of time. I just want to take a moment to say that one of the biggest constraints, as you and I have talked about, is that people don't have any access to affordable childcare, and so they are left being unable to work even though they want to. That's one of the things that we would address in the Build Back Better Act, which I hope we pass. Thank you. Thank you, Mr. Chair.
Senator Smith. Senator Crapo is recognized from his office.
Thank you, Mr. Chairman. And let me start out with you, Director Thompson. First of all, I very much appreciated our visit last Tuesday. I just have one quick question for you, which we discussed then. Housing finance reform, which, as you know, is a top priority of mine. And it's been my view that Congress must find a pathway forward to resolve the conservatorship of our GSEs and do so expeditiously. In that context, I applaud Ranking Member Toomey for releasing his housing finance reform principles last March, which reflect many of the goals that I outlined when I was addressing this issue as the chairman of the committee. These principles include establishing stronger levels of taxpayer protection, preserving the 30-year fixed-rate mortgage, increasing competition among mortgage guarantors, ensuring a level playing field for lenders of all sizes, and promoting access to affordable housing. And my question to you is, if confirmed as the FHFA director, would you be willing to support legislation that is consistent with these principles?
Absolutely, Senator. Thank you.
Thank you. Nice brief answer and the right answer. I appreciate it. Let me move on to you, Governor Brainerd. Again, welcome to you too. I appreciated our visit with, the other day as well. First question I have for you is on inflation, which I know you've already talked about today, but I, like all of us here, are concerned about the December 7% rise in consumer prices and today's record high producer price inflation reading of 9.7%. These high and persistent inflation numbers are, I think, the greatest threat to our economic recovery and household budget. And now is clearly not the time for yet more federal deficit spending or taxes. The question I have for you on this is, if I understood you earlier in your testimony, you said that you were confident that we were going to get back to the 2% rate. The question I have is, how quickly do you see that happening? Is this something that could be done in months, or are we talking years, or what is the time frame you would expect to see us face in trying to get control brought back to about a 2% target?
Well, thank you, Senator, for your question. So I certainly also am very concerned about the high level of inflation, and we are committed at the Federal Reserve to bringing it back down to target, and we're taking a number of actions. We've already decided to end asset purchases in the first quarter. You've seen that the committee has projected several hikes over the course of the year. Of course, we will be in a position to do that, I think, as soon as asset purchases are terminated. And we'll simply have to see what the data requires over the course of the year. We started to discuss shrinking our balance sheet. In terms of the projections on inflation, I think it'll remain high throughout the first 2 quarters. Certainly in the committee's projections, you saw it coming down closer to 2.5% by the end of the year. But I think we should all take these projections, with a fair amount of caution. Sure. And we'll obviously try to bring it down, as quickly as we can, but consistent with a sustained and strong recovery.
All right, thank you. And I realize it's hard to predict these kinds of things, but I appreciate your projections. Last question is, and you've been asked about this also. Senator Toomey talked to you about the pressure to choke off credit to traditional energy companies. And I know Senator Kennedy talked about the same thing. And I understood your answers to that. I personally believe that choking off credit to industries viewed as unfavorable or politically unacceptable and controlling the allocation of capital is not a new concept. You'll recall Operation Choke Point from the Obama administration years. And I certainly hope that President Biden will consider this as he nominates those who will deal with policy at the Fed, regulatory policy at the Fed. You've already indicated you don't believe that the Federal Reserve should act in a way to try to choke off credit to traditional energy companies. My question, though, is if policies such as those Senator Toomey were talking about with you are utilized in our stress testing processes, does that not, in and of itself, select specific types of industries, if they are going to be selected in that way, and subject them to the potential for increased capital requirements or some other type of regulatory burden that would not be there had they not been in that particular business?
Yeah, so I think about supervisory guidance simply asking institutions, large institutions, to be measuring, monitoring, and managing their risk. This is what we ask them to do across the board. So I don't think it has a particular sectoral cast to it. And similarly on scenario analysis, I think of if I think about concentrations of areas where, wildfires are becoming more frequent or flooding is becoming more frequent, if insurers are pulling back from covering those properties, Our scenario analysis would simply allow us to see where are those risks building up, and are there certain counterparties that are very exposed in terms of covering those risks, and might they be subject to a shock that could amplify financial instability throughout our system. So that's how I think about climate scenario analysis. It's quite different than the stress tests that banks have undergone under the traditional capital planning framework.
All right, thank you.
Thank you, Senator Crapo. Senator Reed from Rhode Island is recognized.
Thank you very much, Mr. Chairman. First, let me commend the President for his nomination. Governor Bernard, congratulations on your elevation to Vice Chair, and also Ms. Thompson, congratulations for nomination as Permanent Director of the Fhfa. You all touch upon, in response to previous questions, the critical role of housing in our economy, and I know Ms. Thompson has already talked about some steps she would take going forward to help expand the supply. But one of the interesting things is this ties in also to the inflation problem we're seeing right now. I believe, Governor Brainerd, that 30% of the consumer price index is based on housing prices. And as a result, if we don't get a handle on housing, we will not get an effective handle on inflation. And with that in mind, raising interest rates, will that help us, hurt us? Will it make it more affordable for working families to get good housing?
So I think the question about workforce housing and affordable housing, to the extent that we look at it at the Federal Reserve, is really very much a supply side question. You know, we do meet regularly with the home builders. And, you know, they have been telling us even before the pandemic that shortage of lots is an acute problem. So we went into the pandemic with a shortage of affordable and workforce housing. And, of course, the pandemic has exacerbated materials delays and skilled tradesmen availability. So all of those things, I think, on the supply side are exacerbating these issues. Our tools are very limited on the supply side. We have some incentives under the Community Reinvestment Act, and we are trying to improve the credit that we give there for naturally occurring affordable housing, as well as shoring up those really important institutions that use housing subsidies in partnership with banks. But our tools are limited on the supply side.
Thank you. Governor Burnett, are you aware of the announcement yesterday that the Bank of England is incorporating climate as part of their stress testing for all their institutions?
So I have not studied their most recent statement there. No.
But I would presume that their major motivation is the economic impact, not on anything else, or at least that's the major. Is that your view?
So when we've talked to counterparts, regulators in other countries such as the Bank of England and the Europeans, Canadians, Australians, and others, they're certainly taking on board just the financial risks associated with climate change and trying to incorporate that into their supervisory frameworks.
And we've already seen some aspects of the financial industry, particularly insurers, incur significant losses, particularly in California and wildfires. And so there is definitely an economic effect that's being generated, I think, with more frequency by climate. Is that your sense?
Well, I think the statistics that I saw recently were about $630 billion worth of damages over the last 5 years from severe weather, and that is a historic high. And of course, we all see it in our home areas.
One of the other aspects of inflation, which is one of the most obvious ones, is the gas pump. And that's something, again, that's really beyond the specific control of any agency in the United States government because it's basically pricing is set by a cartel. But what struck me is that the production is not even up to the levels that they've set for themselves. So do you have any insights on what's going on in that market?
So we don't have a lot of insights. Our Dallas Reserve Bank tends to be closely studying trends there. It's certainly true that about a quarter of consumer inflation over the last year has come from food and energy, but really disproportionately from energy. Those prices at the pumps is hurting working Americans across the country.
Oh, thank you. And a quick question, Ms. Thompson. One of the things we've seen recently is a trend for private equity to buy up lots of homes. They have the resources to do that and take them out of the purchase market and put them into the rental market, and in some cases with the ability to dictate higher prices. Is there anything you can do at your agency to look at that?
Sure. Thank you for the question, Senator. And we are taking a look at the private equity participation in a couple of different areas in the manufactured housing communities, where we are very insistent that they have protections, and Fannie and Freddie will not purchase loans unless there are protections for the communities, the owners, and the renters. We're also looking at our REO inventory. Like between Fannie and Freddie, there's probably 9,000 properties, but we've established this First Look program that allows owner-occupants and nonprofits to have the very first look at all the REO properties that are available. And we've increased the number of days from 30 to 45. And we have been looking at the non-performing loan sales as well. And what we require is that any buyer has to go through a waterfall where they have to offer borrowers in these pools a loan modification. And some of these borrowers have been delinquent 3 or 4 years, but they still have to offer these borrowers loan modifications. We've also asked the enterprises to structure smaller pools so that nonprofits can start buying and working with these loans.
Thank you, and I apologize for running over.
Thank you, Senator Reed. Senator Kramer from North Dakota is recognized.
Thank you, Mr. Chairman. Ranking Member Toomey, thank you both, and congratulations to both of you on your nominations. And Governor Brainerd, thank you, Brainerd, for the discussion yesterday. I enjoyed it very much. I found it interesting. I liked most of your answers, quite honestly. So now I'm going to try to reconcile them a little bit after yesterday's meeting. And given today's conversation, you've been quite consistent, and particularly in the last couple, you referenced in response to climate scenario analysis as opposed to climate stress tests. The example you used with me yesterday, and that is fire. So if you have a forest fire situation and there are insurers are backing out, that represents a risk. But you use that in response to a climate question, not a fire question. I think it was Senator Reed's question that you referenced the record weather events. I just need to be, I want you to be really definitive about this issue, maybe as definitive as you were with me yesterday. Are you in sync with Chairman Powell's position? And he stated it a couple of times a couple of days ago. You watched that. Would you say you're pretty well in sync with his analysis or his assessment of climate and where it belongs in your mandates?
Yes, Senator, thanks for the question. Yes, I am.
So he said that to the degree it fits within your mandates, climate is one of many factors, basically. He said important, but a very narrow one. So how is it that you get so much more, now I'm asking you to analyze yourself or your supporters, but I'm trying to reconcile why so many of our friends on the other side of the aisle think you're wonderful on climate, but they're not going to support Chairman Powell for some of the same reasons. And I'm just wondering, how can I reconcile that in my mind? I'm not asking you to be my psychologist necessarily, but do you have any thoughts or theories on why that might be?
You know, we do operate within our statutory mandates, and we talk a lot about what those are and what those mean. So I think, generally speaking, those are the guardrails that we operate within. You know, I do try to be aware of emerging risks generally. I thought it was important to develop research in the area of digital finance, for instance, several years ago. So I am looking out over the horizon sometimes, and perhaps talk more about the research. But we're very in sync in terms of what we actually think our responsibilities as an institution are.
Now, I want to just a little bit of opining on the recent question Senator Reid asked you about on the supply side, and particularly gasoline fuel. You rightly recognize that represents probably a quarter of the inflation. And by the way, it's going up as fast as inflation, if not the rest of inflation, if not faster, as you probably know. I, of course, come from a state that is now producing about 400,000 barrels of oil less than it did before, has a lot of capacity for more. The Bakken is cash starved, quite honestly. And some of that is because of the signals that they're getting from banks, and that banks are getting from others, that investing in oil production is persona non grata. Now, the demand's going up. The supply is being held down by both rhetoric and policy. Some of it's not, most of it's not your policies, but it is the president's. And I worry that, frankly, we want to transfer our climate guilt by suggesting that we shouldn't produce so much in the United States while global demand goes up, and our adversaries, who are not nearly as environmentally friendly as we are, produce. Does that matter, do you think, in these climate scenarios, that we may very well be hurting our own economy and our own production and our own job creation while transferring both the opportunity and the guilt to another polluting country?
So, the question that you're raising is a very big one that I don't study in terms of energy policy. Generally, I would just say that, when we do supervise institutions to see that they are managing their material risks, it's pretty pedestrian stuff. It's, do you have a risk management committee? Is that risk management committee well informed? Do you have the right data? Do you have the right models? Do you have the right controls? It's it's really not specific in any way to particular, borrowers or sectors. I understand the concern that you're raising, but our supervisory guidance is very much around making sure those guardrails are there.
Very good. Thank you. Thank you, Mr. Chairman.
Thank you, Senator Kramer. Senator Cortez Masto from Nevada is recognized from her office.
Mr. Chairman, Ranking Member, thank you very much. Welcome to both of the nominees, and thank you for your service, and thank you for your commitment to serve moving forward. Let me start with Acting Director Thompson on the Federal Home Loan Banks. Thank you so much for taking the time to talk with me earlier and about this particular issue. As you well know, and we've discussed this, the third GSE regulated by the Federal Housing Finance Agency are the Federal Home Loan Banks. In our discussion, I noted that my office's research discovered that the Federal Home Loan Bank that serves Nevada has long neglected investments in our state. And as you well know, this has been an issue for me. So my question, Director Thompson, is will you commit to working with my office to ensure that the Federal Home Loan Bank of San Francisco improves on its record of investment in Nevada?
That's a great question, Senator, and thank you for bringing this issue to my attention. It's my expectation that the Federal Home Loan Banks would serve each state within their districts. And I would mention to you that the Home Loan Bank of San Francisco did change the scoring mechanism so that Nevada is able to get their portion of an affordable housing program. But there should not be a case where there's a state that does not get a portion of the affordable housing program from the banks.
That's right. Thank you. And I know they've made that change, and that was at my request. They've been working with me, and I appreciate that. But I know there is a role for you to play as the director. And in that role, I also know that in reviewing each Federal Home Loan Bank's community lending plans, Only one included investments in Native American communities. So my next question is, will you ensure that the community lending plans are reviewed and appropriate to the needs of their communities?
Yes, thanks again, Senator, for the question. So as I committed to you, I will have conversations with all of the bank presidents and the community investment officers that reside in each of the federal home loan banks to talk to them about filling the specific needs in their respective communities. There shouldn't be a case where there's a tribal community that is not being recognized in the community lending plans for the federal home loan banks. And we are going to have those conversations, and that won't be the case.
Thank you. And Director, just one final thing. Beyond the affordable housing programs and other voluntary programs, thank you for your commitment there. Curious, do you have any other priorities with respect to the oversight over the federal home loan banks?
Sure, yeah. So we are looking at right now, the federal home loan banks play a huge role in the financial system. And during the pandemic, they certainly were very much utilized. But the advances right now are relatively low. And so we're looking at ways to just oversee the home loan banks and make sure that the advances and the earnings are appropriate. So I've got my supervisory team working very closely with the home loan banks to make sure that they are supervised in a safe and sound manner.
Great, thank you. I look forward to working with you as well as we move through this process. Governor Brainerd, let me go back to you as well. And thank you again, as always, for speaking with me. It's a pleasure to welcome you back to the committee. I know in your decades-long career in public service that you represented our interests on an international stage. I also know in the last few years that Chair Powell also has entrusted you to work closely with former Secretary of Treasury Mnuchin and other appointees under the former administration in setting up the Federal Reserve's response to the COVID-19 pandemic. Clearly, you've played a critical role at the Federal Reserve. I also know the 9 committees you chair 4 of them. And so, very briefly, because my time is running out, can you tell me how you work with the other board members, the regional bank presidents, and other agency heads to not only respond to the pandemic and other monetary policy, but also bank regulatory challenges as well?
Well, we were as surprised, I think, as everybody by the just incredible turmoil we saw in the Treasury markets. I've never seen anything like that, and so we needed to respond very quickly. And I think, we just worked seamlessly across the regulatory agencies. We did need to relax some bank safeguards to make sure that they could continue lending, to make sure that their existing loans wouldn't be considered impaired. And we stood up facilities very quickly, and we also, once the turmoil passed, we were very quick to wind them down. And I think, generally speaking, we're in a much better place today. As a result, we have many Americans have jobs and balance sheets that are much healthier, and many more businesses are thriving today because of the efforts you did here in Congress and the efforts that we did to carry out those programs you asked us to undertake.
Thank you. Thank you both again. Mr. Chair, thank you.
Thank you, Senator Cortez Masto. Senator Daines from Montana is recognized.
Chairman, thank you. Welcome, Governor Brainerd. We had quite the CPI report yesterday. Inflation rising at the fastest pace in 4 decades. That takes me back to when I graduated from high school. In Montana and other mountain states, annual inflation is actually 8.6%, which is significantly higher than the national average of 7%. Needless to say, I think this report adds to the continued string of bad news for Montanans and Americans. On a year-over-year basis, real average weekly earnings declined by 2.4%. I've heard many of my colleagues on the other side of the aisle say that inflation is nearing a peak. I distinctly remember being right here not long ago challenging this notion that this inflation was transitory. We heard from very smart people who were sitting right where you are, rejecting that notion, and we were forcefully pushing back and saying, we don't think so. Now, granted, forecasts are forecasts. You don't always get them right. I hope that inflation is nearing its peak, but I didn't see anything in this recent report that provides any sort of confidence that inflation is fading in a meaningful way. In fact, to the contrary, peeling it back, look what's going on right now in China with the zero COVID policies from Xi Jinping. I think the supply chain disruptions will only increase. I met with Montana grain growers just an hour ago. They told me that one of the trucking companies that they depend on just fired 14 employees because of the vax mandate. They can't get fertilizer back and forth across the Canadian border. Fertilizer prices have doubled. This is a huge issue right now for farmers, not talked about enough, but one more contributing factor to the inflationary forces currently in this economy. Chairman Powell told the committee on Tuesday that high inflation is a, quote, severe threat to the labor market. I agree with that, and I hope you do as well, Governor Brainerd. Turning to my questions, I'd like to follow up on Ranking Member Toomey's points regarding climate-related financial risks. Over the past year, you've delivered a number of speeches suggesting that the Fed may take a more active role in environmental policy. Specifically, you announced that the Fed is, quote, developing scenario analysis to model the possible financial risks associated with climate change, end quote. However, the Fed lacks both the experience and the expertise in environmental matters. Further, actual climate researchers have found that current climate models cannot be used to provide financially meaningful information. This raises the troubling prospect for many of us here today that the Fed's work in this area is politically motivated rather than based on actual data or expertise. And I say that respectfully as a chemical engineer by degree. My question for you, Governor Brainerd, on what basis do you believe the Fed is positioned to shape environmental policy given its lack of experience and expertise in this area?
Well, thank you very much for your questions. First, on inflation, couldn't agree with you more. It's very high, and we have a responsibility to bring inflation down. We are orienting monetary policy to do that. We have accelerated the tapering of asset purchases so that we can be in a position to move on increasing the federal funds rate. And we have projected several increases this year and also talked about having the balance sheet starting to shrink sometime thereafter. So we're very focused on that, as Chair Powell said. With regard to the issues surrounding climate, we don't do environmental policy at the Federal Reserve. As you say, it's not our expertise. What we do have responsibility for is making sure that supervised institutions are properly risk managing, and we do have some sort of responsibility for understanding potential financial stability implications of a host of different kinds of things, and that's where scenario analysis comes in. You know, we don't have any expertise in disease and pandemics, but certainly it turned out that the pandemic had enormous financial stability consequences. So it's just incumbent on us to be doing research to understand how shocks could affect our financial system, and that could include severe weather events and other aspects associated
and speaking of shocks, I think we all remember the War of Yom Kippur. I mean, some of us are old enough to remember what happened back in 1973 when we were dependent on the Middle East for oil, and the shocking effect that had when oil prices quadrupled. Ultimately, the inflationary effects, and in 1981, seeing 18.6% 30-year fixed mortgages. It was devastating for so many Americans, including farmers and ranchers and folks working hard every day to make ends meet. And speaking of politically motivated, and with my distinguished colleague here from North Dakota sitting next to me, when we watched this president, with one stroke of a pen, stop the Keystone XL pipeline, which actually reduces carbon emissions because it's the most environmentally sound, minimum amount of carbon emissions way to transport oil versus using rail cars or trucks. count us all in here as skeptics, but there's not going to be political motivation, and I hope that you will guard the Fed, and I hope you will ensure they stick with their dual mandates. So I asked this question to Chairman Powell this week. I'd like to ask it to you as well. Do you think that rolling blackouts, and I had just come from a hearing before I came to this hearing on Tuesday when Powell was here, where we literally had folks talking about breaching dams in this country. These are radical ideas. Do you think that rolling blackouts due to a lack of stable baseload power poses a more tangible near-term threat to the stability of the financial system?
We try to take into account a whole host of different risks to the system. So we are trying always to kind of look out over the horizon and take into account a whole host of risks, including from abroad. So we do try to do that. We're not very successful always, but we certainly try.
Yeah, well, thank you. And again, my final comment here. On one hand, we have our colleagues who are sending the strongest message possible that we should stop production of oil, natural gas, coal, even breaching dams in some cases here. You can't have it both ways. It's really what this will do to energy prices, what it's going to do to this economy and inflation. That's why this car's spinning out of control right now on the highway. And the Fed has its role, but I'm just very concerned about the policies coming from this administration that are creating severe harms now for the American people. And we're seeing it at the gas pump. We're seeing it with inflation in this economy. Thank you.
Senator Ossoff from Georgia is recognized from his office.
Thank you, Mr. Chairman. Thank you to our nominees. Ms. Thompson, what tools would you have at your disposal at the Federal Housing Finance Agency? What tools might Congress be able to strengthen or offer to the agency to increase the supply of housing in communities where there is an acute housing shortage and a housing affordability crisis? Do you agree that increasing supply, adding units, adding density is key to resolving the crisis of affordable housing? And, you know, when I look around the state of Georgia, speak with community leaders, look at the housing market, 48% of folks in the city of Augusta say that affordable housing is a very high need. Georgia's lost 11,000 affordable housing units through the qualified contract exception, the low income housing tax credit in recent decades. In Atlanta, in Rome, in Savannah, in Albany, in rural communities, the rents and the prices of homes are increasing at an alarming rate. So the question again is, what tools will you have at the agency to increase housing supply? Do you believe increasing housing supply is essential? And finally, will you work with me and community leaders in those cities and communities across the state of Georgia to identify solutions particular to the needs of my state to help bring more housing supply online, add units, and help folks afford homes?
It's a great question, Senator, and absolutely, supply is a major, major issue in housing, and the supply issue really is exacerbated with respect to affordable housing. We certainly are we don't have any direct influence on supply, but one of the things that we've done is through the Federal Home Loan Bank's Affordable Housing Program, they're able to contribute to affordable projects around the country. And we've also increased the enterprise's allotment for low-income housing tax credit. And we increased their allotment to help with the affordable housing supply and affordable housing preservation. We are really focused on, working with our regulated entities to do whatever we can in this space. We also have allowed the enterprises to purchase manufactured housing, and we also have allowed them to purchase these accessory dwelling units. But in many cases, there are local zoning ordinances that get in the way of some of the affordable houses that could be built, or the types of affordable housing. But we are very much committed to working with you and all members of this Congress to try to do what we can to address this issue.
Thank you, Ms. Thompson. And my time's limited, but just briefly, I mentioned Atlanta.
Albany, Augusta, Columbus, Savannah. This is a serious issue in communities across the state. Will you commit to working with my office, elected officials, community leaders in those communities, and others to identify specific solutions, work collaboratively to bring down the cost of housing, to bring down rents, and add more housing supply in those communities?
Absolutely, Senator.
Thank you, Ms. Thompson. Dr. Brainerd, congratulations on your nomination for this position. I'd like to ask you a question about the prevalence of retail investing and stock trading in the leadership of the Federal Reserve. I want to commend Chairman Brown for his leadership offering legislation to address this. Is there a cultural problem, and is there widespread stock trading potentially on the basis of proprietary or non-public information or the expectation of upcoming policy announcements at any level in the Federal Reserve, in your opinion?
I don't believe there is, but I think we've all been surprised and dismayed by some of the financial disclosures.
Dr. Brainerd, will you help to ensure that the Fed complies with any lawful requests or commands for records, documents, or information pertaining to stock trading by current or former Federal Reserve officials should Congress wish to review those trades and their propriety?
Yes.
Thank you, Dr. Brainerd. And a policy question for you. And what is your view of the distributional effects of quantitative easing? Over the long run, the relative benefit to employment against the exacerbation of inequality by driving up asset prices in a way that may favor those who hold equities, hold assets, own homes as liquidity is added to financial markets. Have you conducted any research? Has the Fed conducted any research? Can you provide that research to the committee? And what's your personal view?
I know there is some research on this. It's not clear cut. It tends to be the case that during recessions, wealth inequality diminishes, and then it tends to increase during recoveries. We use quantitative easing only when we've run out of room on the interest rate. And the alternative of allowing unemployment rates to skyrocket would be very, very bad, I think, for working Americans who really rely primarily on their jobs for income. So we stay very focused on that dual mandate and try to protect employment in downturns to the greatest extent possible using whatever tools we have.
Thank you, Dr. Brainerd. My time is up. I'll send you some additional questions for the record and look forward to your responses. Congratulations again to you both for your nominations. I yield back, Mr. Chairman.
Thank you. Senator Toomey has some closing questions, remarks, as do I, and we'll wrap up.
Thank you, Mr. Chairman. I first want to respond briefly to our colleague from Massachusetts who seemed to be suggesting that inflation is the result of greedy companies in highly concentrated industries. In fact, I don't think the data supports the contention. I don't think that's well correlated, that is to say the rate of inflation and the extent to which an industry is consolidated. And in fact, one that I can think of that might be among the least concentrated industries that I know of, the retail sale of used cars, is one that is experienced among the highest rates of inflation, 37% over the last year. I also want to respond to Governor Brainerd's statement that the climate scenario analysis that she's been advocating is not a stress test. It seems to me that is little more than a semantic difference. Of course, the whole purpose is to test whether banks are prepared to address perceived risks associated with climate change. And then if the Fed determines they're not, to promulgate new regulatory requirements. That sounds exactly like stress testing, whether or not you call it by a different name. And I'm not alone in that view. The New York Times, not exactly a conservative paper, said the same thing when it reported on a speech that Dr. Brainerd gave last October about climate scenario analysis at the Fed's annual stress testing conference. The Times wrote, and I quote, Ms. Brainerd said the Fed was developing climate-related scenarios for use in bank safety checkups, which are often called stress tests, end quote. Okay, here's the concern is, there are many categories of risks to banks and the financial system that nobody is advocating a separate scenario analysis for. But there is an advocacy for the scenario analysis for even lower risk, lower probability risk problems in the climate space. The fact is the transition risk associated with climate change is a political risk, and the danger is this becomes a self-fulfilling prophecy. And the Fed says, do a scenario analysis, and the scenario you need to analyze is a scenario in which we impose new regulations on you that are problematic for your portfolio. Finally, let me just turn to Ms. Thompson. You and I may have a different understanding of the Fhfa statute and other statutes because it's my view that Fhfa clearly does authorize the FHFA to take the GSEs out of conservatorship. So can you tell me specifically, is there something that is lacking in legislation that you think is required for you to move in that direction?
Sure. Thank you for the question, Senator. So it's my belief that the enterprises, actually FHFA is going to have a conversation with Treasury. And
I agree with that.
At the end state of the enterprises is something that Congress would have to legislate. So if the enterprises reach their capital requirements that we've established, we certainly would be having conversations with lots of different stakeholders. But the end state, if Congress wants the enterprises to come out as is, then that's, I think, doable within the statute. But if there's another outcome, if they want it to be a utility or if they want other charters, those are things that Congress is going to have to.
Well, sure, if we wanted to change the existing statutes and exchange existing charters, then we would have to pass legislation to do so. But my point is, that's not the only option available. Would you commit to going as far as you legally can in moving in the direction of coming out of the conservatorship?
Congressman, Senator, that's a great question. And I will commit to positioning the enterprises and working with the Congress to do whatever is necessary to move them out of conservatorship in a responsible time plan. We would certainly be wanting to work with Congress and other stakeholders on this issue.
Well, I appreciate that, and I look forward to working with you towards that very end. Thank you, Mr. Chairman.
Thank you, Senator Toomey. A few closing comments. Thank you both, by the way, for being here. And for a moment about GSE reform, something where I hope we can reach consensus in this committee. Many of my colleagues have talked about the importance of that, of housing finance reform before the pandemic. As you know, Acting Director, we had a series of hearings on GSE reform. Consensus was emerging when what the system should look like. I'd like to put out a list of priorities where I think we can reach agreement. And there will be some differences of degree, I'm sure, between between and among all of us. One, protecting access to affordable 30-year fixed rate mortgages, providing a catastrophic government guarantees, structuring loan guarantees like public utilities, providing a regulated rate of return, serving a broad national market, serving lenders of all types and sizes equitably, maintaining a duty to serve all markets, all borrowers, maintaining affordable housing goals and metrics, expanding investments in affordable housing, and maintaining the GSE's successful multifamily business models and ensure continued or better access for financing of affordable rental housing. These reforms would create a safe and sound system that meets the needs of renters and homeowners across the country. I'm certainly happy to engage with the ranking member and others on this committee in both parties and getting, as we spoke on the phone, getting the kind of technical assistance that you are so good at, Acting Director, to provide to us. I'd also make one comment that Chair Powell raised the same distinction as on Tuesday as Governor Brainerd today on climate stress tests and climate stress scenarios. Thank you. It was a full and productive discussion. I applaud the Biden administration for the nomination of these two eminently qualified women to these vitally important positions in our government. I look forward to supporting the nominations of each of you. I urge my colleagues on both sides to join me. For senators who wish to submit questions, these questions are due at noon on Tuesday, the 18th of January. To the nominees, we need your responses by Friday, January 24th. Thank you for your testimony in appearing today. The committee's adjourned. Thanks, Beth.